Well, let's talk about clothing. Let's talk about American Eagle. And I helped this company years ago. Remember, got a great dividend. We did okay on it, but it just seemed to get stuck for a while. So I'm kind of curious to look at this one. Maybe now it's a buy again. Company again is American Eagle Outfitters, symbol AEO in the apparel retail industry, which, by the way, is a very volatile industry because you can be the hot one this year. Next year, your designs came out. Nope, nobody wanted them, and you go down dramatically. They are in the industry of apparel retail. Short on the float is 18.9%. Gee, what are those meme buyers there?
They came.
They did come to American Eagle?
Yeah.
Oh, okay. Oh, that's right. That's why we're talking about this one. What am I thinking? I totally forgot. Okay, they're there. Okay, let's talk more about that in a minute. We do see a PE ratio is 12 versus 24.7. That's a positive. Price of sales 0.4 versus 2.1. Price of book value 1.4 versus 6.3. And we see price of cash flows only 4.9 versus 16. So no PEG ratio, but those valuation ratios look pretty attractive. Now, over the last year, the earnings are down 11.7%. The industry is up 9%. Sales for American Eagle, well, they were down 0.9% when the industry was up 6.7%. Analysts don't like American Eagle for the next 5 years. They're looking for earnings growth or decline of 52.5%. But the industry seems to be in trouble as well, down 74.1 is the estimate on the earnings going forward from the analysts. Now, they still pay a nice dividend here, 4.3% a yield, payout ratio very attractive, 49.5, so that's a positive there. Take a look at the balance sheet. Current ratio is 1.4 versus 1.7. That's okay. Debt to equity is just at our upper limit. It's about 1.2 versus 0.9, but I'm okay with a 1.2 debt to equity. We do see a net profit margin of 3.7 versus 8.4. Return on equity is 13.3 versus 34. Free cash flow could be a problem here. It's only $212 million. The industry is at $3.3 billion. Chase, what do you got?
Yeah, so current price here for American Eagle, again, their ticker symbol is AEO. It's $11.74 and 52-week range for this company. The low here, $9.27 and the high, $22.83. Over the last year, I mean, it's been crushed, down about 44%. It's interesting, 5-year returns about 22%. And I kind of look at Abercrombie & Fitch as the primary competitor to American Eagle. 5-year return for Abercrombie & Fitch, 852%. So...
Ooh.
They've definitely gone different routes in terms of their stock
Did you see the
performance.
10-year return for American Eagle?
I did not. I'll let you give that.
Yeah, I show a negative 12.9%.
Interesting.
Yeah.
And that includes dividends, I believe.
Yeah.
So, yeah, American Eagle now has a market cap of about $1.95 billion, where Abercrombie & Fitch is actually, about $5-ish billion, or $4.5 billion is where that's actually at. So definitely smaller than Abercrombie & Fitch. But going forward, I mean, this looks interesting. I'll tell you why. I mean, you go out to January 2027, estimated earnings per share of $1.18 gives you a target sell price here of $19.59. The stock trades for under 10 times earnings. And this kind of got lumped in with meme stocks, and I don't really know if it necessarily was. The media said it was. But this seems like it's different than your normal meme stocks. This one has earnings. It's a decent-sized company, still around $2 billion. The only thing that was announced was, I think her name's Sydney Sweeney. She kind of grew to fame in a show called Euphoria. Mm-hmm. She came out with, I guess, they're doing an ad campaign, and the stock popped 18%. And obviously this last week we saw the meme craziness with Kohl's, Open Door, GoPro, Krispy Kreme. And this kind of is like, oh, it's a meme stock. I'm like, is it though? Or is it just they kind of popped on some over short interest, and then this announcement with Sydney Sweeney? I wouldn't lump this in with the other meme stocks, to be honest.
Well, I mean, you can call it a meme stock, but it's a good one because you actually have something there versus the other meme stocks generally losing money, ton of debt, and so forth. This would be one. And again, the meme stocks come in, or the meme, what do you call them, players, whatever you want to call them. They come in to buy the stock like crazy. It drives it up. Now, the only problem I can see with them, or why it went down so much, was 90 days ago the earnings were expected by the analysts to be $1.57, and you said now they're $1.18. That's a decline of 25%. Why are those earnings dropping so much? What is going on with this
Tariffs?
business?
Maybe speculating.
Okay, I was going to say if you knew that or not, but yeah, that very well could be. But that's a big hit, and we've talked about this with the tariffs, that we believe that you will see earnings lower for companies, but that's a pretty big decline on their earnings for them, and maybe they get a lot from China.
Yeah, potentially. I mean, I'm not sure. I'm speculating here. It's definitely something that you'd have to look into. But I mean, if I was a meme stock trader and this was a meme stock, this would be one of my favorite meme stocks, I'd have to say. And one thing I'll kind of point out with the meme stocks that I think is so funny is this past week when you watch it, it's like there'd be one day where one meme stock was hot, and then the next day another one, and that one that was hot the prior day, that one would fall dramatically, and it's like everybody's kind of chasing them around. And I think Kohl's, at one point, they went as high as like $22 a share, and then that same day they fell like 50% from the high. I mean, it's just crazy why anybody does this. It is pure gambling. It's not investing to do meme stocks. It is pure gambling because they are all over the place. And what concerns when you talk about the overvaluations and the craziness in the market, this is just another thing that kind of points to that. And remember, the last time we saw meme stocks was 2021, and 2022 was a very difficult year.
Yeah,
so
that's true.
Again, be cautious.
I think we say that every show. Be cautious, be cautious. It doesn't mean you can't invest. Just be careful what you invest in, because there's a lot of things pricey, and you don't go to the store and buy the highest price thing. You try to buy things on sale. So